All right, everybody, welcome back to Market Talks with Dr. Stoxx. This is Dr. Tom Carr, aka Dr. Stoxx, coming to you live from the Dr. Stoxx live trading room on drstocks.com. That's drstoxx.com. And if you want to join me every trading day in the live trading room, you would go over to subscribe, scroll down to live trading room, click on that link, and you'll join us here in the live room with a great group of traders of all kinds of experience, some very little, some experienced fund managers, and so on, and everybody in between. And I jump on the live mic every afternoon to do a little bit of trading. We will very soon be launching our live options room, a similar kind of setup in Discord. Not ready yet, but that should be coming up next week. Today is the 2nd of January, the very first trading day of 2025. Hope everyone had a great new year. And we've got a rather bit of a weakness in the market this today and previous to the New Year's Day break, which is a little bit unusual because normally this time of year, from Christmas Eve through about the 3rd of January, you tend to get a pretty good run in the overall market. And we started off on a good note Christmas Eve, and everything's been kind of downhill ever since. Today's been a very volatile day. We had a good run early. We had a couple drops in the middle of the day, bounces back, drop again to new lows of the day. Now we're starting to float back a little bit higher, but man, it's been pretty choppy, gappy, trappy, crappy kind of tape. That said, we trade the market that we are given, not the market that we want, and we always take trading one day at a time. All right, I'm going to jump over to Trading View. I've got my typical, actually, that's not the chart. This is the chart I wanted to look at. This is the standard setup I have on the daily chart. I've got the linear regression channel here with a 1.5 and a 2.0 standard deviation, which gives me a buy zone in the pink and a sell zone in the blue. I've got the 21 EMA, the 50 SMA. Somewhere on here is the 200 SMA. Volume bars and stochastics down at the bottom at a standard 14 periodicity. So the market is kind of working off this head and shoulders top. I say this many times. I'll say it again. Head and shoulders tops are pretty unreliable and they tend to morph into something more like a falling wedge. But we do have now some trading as of today below the neckline of that pattern. That's not a good place to be. We were well below the neckline of the pattern. We even took out the lows of the FOMC, JPOW, Fed being too hawkish lows. That was a couple of weeks ago. That set a line in the sand for the market. We came down. We exceeded that just briefly for the S&P, and then we've been rallying slowly. I wouldn't say surely, but slowly back up off those lows. We're going to look at this on an intraday chart basis. That's where we're at. Now, when you start to violate lows like that and then bounce back off them, it can lead, doesn't always, but can lead to a multi-bar, multi-day in this case, bounce back. What happens is you flush out all of the new longs that were buying the dip and then their stops got triggered. You're flushing out all kinds of folks who just are really fearful that the market's going to crash because it's below support now. And you're sucking in a lot of new shorts who are thinking, I'm going to buy the breakdown. I'm going to buy that break of support. I'm not buy, but I'm going to enter a short position, a new short position. And when that happens, we get any kind of a rally back up, you're going to get all kinds of people scrambling for shares long, and that's what causes the bounce. Those poor bulls that got out at the bottom are now going to try to get back on board of a little run. The shorts that shorted the bottom are now going to have to cover because they're now underwater. And yeah, the smart money guys, this is why they're smart money. They are selling up here at the top and they're buying those dips. They're down here buying those dips. And how do they do that? Well, one of the ways they do that is they drill down to, let me do this over here, to an intraday chart, right? So this is the 4-hour chart for the S&P. And you can see On this chart now, we don't have anything like a head and shoulders top. I mean, I guess you could make that your left shoulder. This is your head. Here's your right shoulder. But that's not the dominant pattern that we see. The dominant pattern right now on the 4-hour chart, you'd see this on the 2-hour chart as well, is a double bottom. We are below the uptrending LRC. We have tested the lows of the post Powell crash. Let's just call it that because that's kind of what it was. Everybody panicking that the Fed is going to push us into recession because they're not dovish enough. Post Powell crash, reaction, a bullish bounce back, pretty much of a dead cat bounce, and then right back down, all the week of the Santa rally when things are supposed to be nice and bullish and easy trading, all the way back down to test those lows again. The lows held on that first test, right? There's your first 4-hour bar. That was this morning. Now we're in the afternoon session. We're seeing a second bar holding as well, even though it did get a little lower not too long ago, maybe an hour ago, got a little lower than both of those points, but we bounce right back up again. And I do think this is creating a line in the sand, short term, should take us into the close today. I don't think we're going to get back up to where we opened. Don't think that at all, but I think we'll start to climb up that red candle a little bit. And then tomorrow we'll probably get a gap up and a run higher, not anything too excessive, but a run higher, maybe up to about 590 for the SPY. What would it be for QQQ? Yeah, maybe about 515, 516 for QQQ. So we just get a little bit of a run higher, and maybe not 590. I'm sorry, about 587, 586 for the SPY for tomorrow. And it gets everybody excited again, and we have new, fresh longs coming in. And then I think next week, I'm pretty sure next week, we'll see a resumption at some point of the selling pressure. I do think we're going lower this month in January. I do think the whole first quarter is going to be fairly bearish. And I'm not piling on shorts right now in the hopes of holding them all the way to the end. We don't do that. We trade one day at a time. But we just have come a little too far too fast. We've got too many uncertainties. And I think some of the new administrative tactics are going to be a bit harsher on the market than the previous administration initially. What they're going to do, in my opinion, is going to be very good for the overall economy, but that's further down the road. It's going to cause some pain initially, and the market needs to price that in. We've also got a whole earnings season that may be a little rough, right? You still have China heading, sluggish growth and not buying as much of American goods. You've got a very strong dollar, which is hurting our economy, and you've got Europe on the brink of recession. That's never good, right? Never good to have one of our big trading partners in a major recession. So there are some problems out there, some headwinds, let's say. All right, but the good news is, short term, I think we have held support. I think we're okay for the rest of the day and probably for tomorrow. I could be totally wrong, but that's just what the charts are saying. We do have some bullish divergence working in as well. So QQQ is a little different of a pattern. It's not a double bottom because we got below the Powell low. We took out that Powell low, and then the market's starting to fiddle around in deep water. Where is the bottom? Where can I stand? And you have to kind of go back to see clusters of price consolidation in a tight range in a near-term basis. That gives you a volume shelf. That's typically where you find a lot of shares have exchanged hands, and that can act as a support when price comes down into it from above. And I kind of think that's what we've got right there, right? A little volume shelf. We're in the middle of that. And yeah, we had some bullish divergence working into stochastics. We may still get that, have to adjust it a little bit, but it's not looking that hopeful just yet. It's not quite as strong. But we are not selling down anymore. We've got a little bit of a green candle here in the last couple hours of trading for today. And then tomorrow, we get to do it all over again. I think the small caps are pretty much of a no-go zone again. I've been saying this a lot about the small caps. And that is, hold on a minute, because I think yeah, we do. Hold on, just seeing if we're still in TNA. Yeah. No, we got stopped out. We got stopped out a raised stop on TNA. TNA got off to a good start, and then it really cracked. It cracked today. It was a gap up, right? So we had gap up. We were able to raise our stop, and then it cracked right through our raised stop. All right, it's that's just part of trading. And the fact that we can hold those highs, the fact that we're down near the lows of the range, and the fact that it hasn't had much of a bounce, haven't had much of a bounce at all in the small caps, as opposed to the S&P, the big bounce there, the QQQ, nice big bounce there, very shallow bounce relative to recent highs for TNA. Now there is a little bit of chance, little chance here that we're building a range like a bullish base down in this area, and we're getting a little bit of bullish divergence down here in stochastics. Let me put on my divergence indicator so we pick up anything else. Yeah, that's really about all there is. And we are in a slightly uptrending LRC. We're down here at the pink zone. The mantra is you buy the pink in an uptrend, you sell the blue in a downtrend. So we've got that going for us. But until that little wedge that I'm showing there breaks out, and it would have to break out to the upside for this to work, then it's not a buy. It's not a buy anymore. It was. We were trading for a little bit of a bounce into the end of the weekend, and we got the bounce. We just didn't slip out when we had a chance to off the open today, and then we got stopped out on the raise stop. All right, so small caps, no-go zone until that passes. Now, I do like gold, and we are long gold. We're long gold, silver, Bitcoin in as a kind of play against the dollar, and all three are doing well. At least last time I checked, Bitcoin was doing well. Yeah, it is. It's doing really well. Wow, it's up 4.33%. Nice, awesome. Yeah, we have Bitcoin all over the place. So we've got two positions on Bitcoin in our wealth building portfolio, and we just put on some micro mini Bitcoin MBT this morning, right off the bell. Just jumped right in and turned out to be good so far. So gold, this is a 4-hour chart of gold. You can see the downtrend, but if we look at the daily chart, we see something different. We see a nice uptrend. We are playing. There is a very solid line of support, trend support right there. We got in a couple of days ago, or was it even last week? It was before the break. We got in on Monday, and today's Thursday. So a nice big bounce up today is, with the dollar strong, gold is up. That tells you a lot about the strength of gold. If the dollar tips out, and let's just take a quick look at the dollar, because here we go. We go to futures, we go down to US dollar, and it's, oops, what the heck is that? Here it is. So up, 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 without much in the way of a pullback at all. The dollar has just been crazy, crazy, crazy strong. Every time we get a little gap and crap, like that red bar right there, I'm out on the board saying, come on, this is finally it. Finally, the dollar's going to fall. Let's get long gold. Let's get long Bitcoin. Let's get long bonds. Let's get long oil. And then it goes right back up again. Yeah, what can you do? Now, today, dollar's very strong. You can see it's up 0.8%. That's really huge for the dollar. And gold is up, and Bitcoin is up, and oil is up. So, man, that's if you're sorry for all these weird ads. This is FinViz. I don't have I'm a free user of FinViz. I have no need for the pay version, and unfortunately, I have to deal with all these stupid ads. All right, let's go back to charts. So gold is good. Let's take a quick look at Bitcoin. Bitcoin, I love this chart. I love this pullback here. Pullback into the 34 EMA bands. You don't have to use those. I just like to use them as areas of support and resistance. Also, they're good as a trend indicator. Into the middle part of the band. So here's the thing about the bands. If you touch the top of the bands and bounce, that's a very strong trend. If you get into the middle of the band, reverse in the middle and bounce back up, that's a little less strong, but also still good. If you get all the way down to the red line in the bands and can't bounce from there, then it's probably a dud and you want to avoid it. So that's how I play the bands. And this got into the middle of the bands, the green one there, reversed, a couple of reversal bars, and then gap up and go today, breaking the pullback trend. And this, to me, looks like it's ready to go. Volume balance has been really good. So look at all this accumulation. These are people buying, 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 not getting out of Bitcoin at all. And they even held. I mean, there was some distribution on those 2 big days. But for the most part, that's way more shares bought than shares being sold. So you have a lot of guys piling in Bitcoin and they've just been waiting, waiting, waiting for this breakout. And here is the breakout. So now everybody's piling on, regardless of what's going on in the dollar. Let's take a look at oil, because I do think energy in general been a totally beaten down sector. The yields are a big part of that. Geopolitical forces notwithstanding, oil has been in a downtrend for a long time. Energy sector in general, downtrend for a long time. I think that may be about ready to come to an end. Oil, of course, should, in theory, lead the energy sector higher. Oil is finally, despite a strong dollar, finally breaking out of that long-term downtrend. Now, it doesn't mean it's just going to go straight up. It's not going to do a rocket shot. That would be a very rare move indeed. But it will probably consolidate, pull back a little bit, form a flag, and then go up again, and then form a flag, go up again. That kind of move. And we're just going to ride it as long as the market will let us. So oil, gold, Bitcoin. Let's take a look at some other sectors that I would love to see get back online, but haven't been showing me any buy signal yet. So, regional banks. We did play DPST when it bounced down here in the pink zone of an uptrending LRC. It was a non-official trade. I don't remember exactly how it came out. Maybe we took a little bit of a scalp profit on a raised stop, but it did go in our direction for at least a few days, but not showing anything that is buy worthy today. So we want to see this give us a very good high volume print to the upside, preferably with stochastics down at a lower spot, not up here at the way, way, way top. Somewhere in the middle of that range would be better. So we're looking for regional banks to get back online. Biotechs. Let's look at XBI. Where is it? It's not here. Let me just add it. Oh, it's way up here. I'm sorry. I had it at the top. Yeah. So biotech's also down in a downtrend, down at the bottom near the pink zone. Potential of a double bottom here with maybe a little bit of divergence, bullish divergence, but not really a whole lot going on. So we did buy a lotto version, a little tiny sliver of shares in LABU, LABU, just on the potential of the upside, and it got off to a great start. It really did. We bought it at where did we buy it? 94.50, and it shot up to 97 or so, something like that. This is LABU now, not XBI. And then it's back down to 93 something. Let me see where it is. Yeah, 93.59. So it's right about where we bought it. Just a little fun money trade on the idea that the discounting of the new Make America Healthy Again administration is not going to totally demolish the industry. They may put some regulations on it, right? They may try to clamp down on advertising, for example. But I don't think I think it's pretty much going to be business as usual for most biotech companies, especially the big ones. And this is just oversold. Now, doesn't mean it's a buy. It's a little sliver, right? Just a little fun money trade. That's all you want to do. We also are long bonds. They have been up and down today. Red, green, red, green. I'm just happy that they're not red right now. Bonds have been a major pain in the butt. I had a horrible trade in a TMF. I mean, overall it was a very profitable trade, but over several months, I was in it and I was selling premium against the shares. I was doing covered calls, I was doing wheels, I was doing diagonal debit spreads over time, collecting income as we went. It was several $1,000s by the time we got out to the, where was it? Like this whole slide right here. And that slide came pretty quickly and took me by surprise. And I was very stubborn with my shares because I would put shares from a wheel, and I just didn't sell them in time. And I started selling calls against them, and that didn't work. And I finally just threw it all into the wind and took the loss. It was an overall win, but it was like 2/3 of the profits were gone by the time I came to my senses. And that happens. That happens to everybody who's trading. As long as you mitigate that by keeping your sizes small and don't just put all your eggs in that one basket, that would be really stupid. But make it part of a 15 to 18 trade portfolio that you're managing all the time, and you'll be fine with taking those kinds of losses. And the opposite could have happened as well, right? I could have been stubborn and it turned right around and right back up to big profits. So but man, you've got to be really careful with those losses. The worst thing you can do as a trader, the worst thing you can do is sit in a losing position way too long and have it be really big. It's okay if it's small, right? It's not going to do a whole lot of damage. But if it's really big and you keep adding, you keep buying that dip, oh, that's the best way to get out of the trading business. Really, don't do that. Don't do that, please. But that said, we did buy some TMF just a little bit ago, a couple of days ago, on that little bump up right there. It was a gap and crap yesterday. It's a gap and crap again today. We're kind of waiting for bonds to say, yeah, thumbs up. Rates are finally going to be falling. The dollar's going to be falling. The Fed is not as hawkish as we thought. The Fed's going to have to backpedal. A recession might be on the table again. Those are the things that are going to propel bonds higher. And right now, we're just taking a low risk, right? You can take a low risk with your stop down below that cluster, and you should be okay. Semiconductors, we've got a very nicely defined set of lower highs and a very nicely defined set of higher lows, and that creates the apex setup, and or a symmetrical triangle. I like to call it an apex setup. And the closer we get to that apex, that point there, the more likely it is to break out, and the harder, sharper, faster it's going to break out. The longer you go sideways, the bigger the base, the bigger the breakout. The breakout should be in the direction of the prevailing trend, and the prevailing trend, as you can see, is up from October. So we are in SOXL, which is the leveraged version of this. The chart of XOXL doesn't look this nice. It's not this clean, but you can use it as a proxy for the semiconductors. We also just bought today some shares in NVDL, the leveraged ETF fund for NVIDIA. Always good to buy the dips in NVIDIA. I would never, ever, ever. There are like 10 stocks that I would never say no to anybody who's asking me, hey, what do you think about this? Is this a good buy? I'm only going to say no if it's like way up high. But if it has made a pullback, if it's coming back down to support, and it's one of those 10 stocks, and I would put Apple and NVIDIA and Microsoft, I don't know who else I might put in there, all the ones I have in my family fund. And then, yeah, buy those dips. Buy those dips. NVIDIA is certainly one of those. I wanted to take a quick look here, and then I will get to your chart requests. So banks are another, right? We saw the regional banks. The big banks also not looking that great. Had a little bit of a dead cat bounce. Maybe we get a double bottom here, but we want to keep an eye on banks. They will have a good move, probably in the first quarter with a lot of outflows from the big blue chip stocks. I think we'll see that rotation go back into banks and some of the other beaten down sectors like the homies, XAB, XHB. So this is downtrend, a big gap and crap today. It's just ugly, ugly, ugly. We got news today that mortgage rates are hitting all-time highs. I'm sorry, not all-time highs. Thank goodness. Thank goodness for that. But they're hitting the highest rate that they've had in this whole sort of increase of rates, or maybe it's highest in the year. I'm not sure, but it's a high point, and that's not good for demand of homes. So we need to see that change. I don't know how. I don't know if you can regulate your way into lower mortgage rates, but um, the, I think if you cut government spending, that might be a big part of it, and if you lower some taxes, that might also help. Um, but otherwise, I have no idea. So that's homies aren't on. They are a no-go zone right now, and energy. I know it looks a little squirrely right here. Is like a dead cat bounce and a possible reversal doji today. Then we should, and with the overbought stochastics, we're probably coming right back down. But if we look at the weekly chart, we get a little different view. Little different view. Um, we have some modest historical, not historical, modest divergence, bullish divergence. But if we look at the broader, let's put this a little higher, right there. If we look at the prevailing trend over the last year and a half or so, or 2 years, we're going to see, first of all, a modest uptrend. Number two, very clearly defined levels of support and resistance with good, clean pivot points. And number three, we just hit a south form of that, the support form of that, and we are in a 2 week reversal. All of that is very good and bullish. Now, this green candle, we've got one more day. It's probably going to close green unless it really tanks tomorrow. And we might get, a little bit of a back and fill on Friday, a little bit of back and fill next week. And then all we need to do to see this confirmed is to get back up to the highs of this week. And then we should see a really nice run in energy. You can play this with ERX or with Gush, Gush. Utilities is the last one I want to look at, and also beaten down sector. This is the weekly chart, actually, which looks pretty good, right? As a pullback setup, we've got the oversold stochastics, we've got the uptrending LRC, the uptrending 34 bands. We pulled back to the green band, which is good, very, very good. Reversed there last week, starting to reverse a little bit more this week after 3 big red candles and some scary volume. So to me, this looks like it's starting to make that little turn from pullback mode to return to trend mode, in which case our target would be up here in the blue zone, right? Not as a sharp angle as that, maybe a little less. That was the angle of the last trend higher, and that is the second of 3 trends higher. Sorry, 2 trends higher. That's your first trend. Your second trend was even steeper. The third trend is probably not going to be quite as steep, but the blue zone is going to be our target, so somewhere around 86. 76 to 86, you can leverage that with UTSL. Let's take a look at the daily chart on this because I'm not sure we're quite at a buy place yet. Nice. Some good green bars here, some good volume coming in. We're still in an uptrending LRC. We're down again in the pink zone. What does this look like on the 4-hour chart? Yeah, it's still just a little bit iffy for me because this could be a bear flag, right? So you've got the downtrend, little weak, but can't get going to the upside. It's just going sideways. And these usually then morph into another leg lower. But if it can hold, if that can hold, if we get the breakout to the upside, not to the downside, then we should see utilities come back online. And they will come back online with rates falling, the dollar weakening, and it's a safe haven. So threats of recession would also stimulate utilities. And it is a play on AI, right, because of the energy demand. So all kinds of good reasons to be bullish on utilities, but we trade the macro. We let the macro environment determine what we trade. But when we drill down to individual companies or funds or whatever it is, we need to look at the technicals, and we're just not seeing the technicals line up here yet. All right, guys, I'm going to stop the video here. I will produce it, and then I'll jump back into the main room, the trading room, and I'll take your chart requests for a little while. Can't do it too long. Take a few of them. God bless everybody. Have a great rest of the afternoon. See you back in the trading room in just a moment. Bye for now.